Australia's unemployment numbers for the month of May will be released later this morning, and economists are expecting to see a further tightening of the labour market. Joining me is our business reporter, Edward Boyd. Ed, the unemployment rate is expected to fall further, 3.8%.
3.8%, that's the prediction for the month of May. Economists believe about 25,000 jobs will have been created during the month, so that'll push the unemployment rate down from 3.9 down 1 to 3.8. So we're going to see a further tightening of the labour market. We know there's a lot of skill shortages out there. There's lots of employers that have job vacancies. Job vacancies are pretty much at record highs. So we're going to keep seeing this trend in the labour market over the next few months, because right now migration isn't high enough to really fill those jobs. We saw the statistics from the ABS yesterday with overseas arrivals and departures, and there was only about 29,000 overseas visitors coming to Australia for a long-term stay. So those are people really that are coming here for jobs, and that is well below the pre-pandemic levels. So we're going to need migration to pick up a bit in Australia over the next sort of 6 to 12 months to really start to fill these gaps in the labour market, Laura.
Yep, business can't say it loud enough, and they're saying it frequently too. Ed, let's talk about Wall Street. It rallied overnight. This after the US Federal Reserve raised interest rates by 0.75%. That's the largest rate rise, a single rate rise in 28 years. Why did the market react so positively to this?
Normally when rates go up, the markets go down sharply, and overnight it was the biggest rate hike in 28 years in America. And the stock market actually wanted to see a bigger than expected rate increase from the US Federal Reserve Bank. The expectation was for 0.5%, but the stock market really wanted to see more than that, and the chairman of the Federal Reserve, Jerome Powell, gave them a 0.75% increase. And it's because of inflation, Laura. Inflation, as we know, has got higher in the States. It's at a 40-year high. The US Fed has been lifting rates, and so far inflation has continued to go up. So they needed to really lift rates even more to try and push down those inflationary figures, inflation in the economy. So the chairman lifted rates much more than expected, and the market actually rallied off the back of it. This is just a little bit from Jerome Powell, just talking about the size of this interest rate hike.
Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting. We will, however, make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as we can.
And you heard Jerome Powell there. Clearly, he's probably going to lift rates by 75 basis points at the next meeting as well. So the US is really trying to get on top of the cash rate and inflation over there. Our market's expected to open higher, Laura, off the back of a strong showing from the US.
Well, we hope so. We'll see you just after 10, Ed. Thanks.